In this video, we'll be discussing the second Bollinger Band trading strategy, where we'll use the help of RSI and divergences to help you identify when to take position in a particular trade, how to set the stop loss, and how to maximize your profits. This video will be basically in continuation to the previous video where we had discussed with you how you can use Bollinger Bands squeeze breakout strategy to maximize your profit. In case you still haven't watched that, please go to our playlist section today, go to the trading strategies and watch that video first thing. You will also find the link for that video in the description of this video, which will help you navigate there very easily. Before we start this video, we'll be discussing in depth about we'll be discussing RSI and divergences as concepts and utilizing them to help you identify trade. So if you guys still haven't watched our videos on technical indicators, please go to the playlist section and watch a video on both these concepts today itself before you get started. However, if you don't have the time yet, you can either basically bookmark this later or watch this where we've very briefly touched both the concepts so that you don't get stuck anywhere in the video. So we have covered both the concepts of RSI and divergences very briefly in this video, and we'll be discussing that. We'll be discussing the entire trade setup for Mahindra and Mahindra share, and we'll be discussing this in quite detail, where we'll help you see how you can identify a divergence, how you can take the trade, and where you can book your profit. Before we get started, simple request to you, please subscribe to our channel right now if you haven't already. Please share this video with your friends, like this video, and if you guys trade actively in the share market or invest actively in the share market and still haven't opened an account with Zerodha yet, then please find the link to open your account with Zerodha in the description of this video and open an account today itself. Zerodha is basically a discount broker which doesn't charge any brokerage on delivery based trades, and the brokerage charged on intraday trades is extremely minimal. So if you guys are still using a conventional broker and paying 0.5% or 1% brokerage on buy sell rates, then please find the link, switch to Zerodha today itself and save on your brokerage charges. Coming back to basically Bollinger Bands trading strategy with RSI and divergences, we start with a quick brief. We previously also discussed a brief on Bollinger Bands where we had discussed these are formed by three lines. The mid one being a moving 20 period moving average, and the upper band being +2 standard deviations above this, and the lower band being -2 standard deviations below this. 95% of the price action for any particular stock would be observed between these two price bands. So that'll be a quick recap on Bollinger Bands in case you haven't gotten the time yet to watch the entire video from our technical indicators section. RSI, very briefly, relative strength index, is yet another technical indicator which we use very often to help identify trades. This particular indicator is an oscillator which moves between values from 0 to 100. So if you will watch over here, RSI can go down to 0, can move up to 100, and it oscillates between these two frames. Now what's important to know is, and what's generally considered a practice, is that if the stock is above a zone of 70, then it's considered to be overbought, which means that it might temporarily show some weakness, but again, used in isolation it can create problems. So generally used with the help of some other indicators or some other candlesticks, which again you can go to the video and study in detail. Below 30 generally indicates that the stock is oversold and might show some recovery in the price, to be particular. So we'll be using this as a concept today. The last thing to know about is about divergences, and then we'll jump right into how you can identify the trade. So the divergences basically, very briefly, occur when the technical indicator and the price of a particular script convey different directions in the stock market. So what we mean over here is that it can happen that the price of a stock is increasing, but the technical indicator basically shows some weakness, some loss in momentum, which indicates that there might be a price reversal. It can be two types, a bearish divergence or a bullish divergence. In case of a bearish divergence, you would basically see the price rising and the indicator losing momentum. In case of bullish divergence, you will see the price decreasing, and again the RSI or any other indicator would point in the other direction. Now coming back to the example of M&M, where we see a bullish divergence here and study that in detail. So bullish divergence over here, you see the price in the shares of M&M decreasing from 1233 down to levels of 1200, and the RSI in the same time period moved from 12 to over around 18. Now this over here is the divergence where you see the price decreasing but the momentum of the share basically increasing, pointing in the other direction, which indicates there might be a price reversal. Now this is not exactly the point you take entry. How you take entry is very simple. You wait for the price to recover and wait for a closing above the mid band. Once the stock closes above the mid band is when you take the entry, keeping the lower price band as your stop loss and keeping the upper range as your profit booking zone. So profit booking zone, generally you keep from a 1:2 reward ratio. So if this is your stop loss around 1%, you can keep around 2% as the first profit taking opportunity. Before we go into details, just a disclaimer, this is not investment advice from us. We currently don't have any active position in Mahindra and Mahindra share, nor are we SEBI registered analyst or advisor. So please complete your own research before taking any active position in this or any other share. Coming back to the divergence. So first you identify the bullish divergence, then you wait for the stock to close above the mid band, and then you wait for a good price up move, keeping the lower band as your stop loss. This is the case when you are trying to identify a bullish divergence. In the case of a bearish divergence, it'll be pretty much the opposite. You first wait for the stock to cross the below the midline, and you set the upper price band as the stop loss. Just to be clear, how to identify the bullish divergence, just in this case where you saw the price decreasing and RSI momentum increasing in this way. Similarly, when you will see a bearish divergence, you will see the price increasing in this direction and the RSI indicator losing momentum in this direction, which would indicate a bearish divergence. And rest of the setup pretty much stays the remain. You wait for the price to close below the mid band and then take active position in that particular stock, taking basically short position this time. So this is it on Bollinger Bands trading strategy. We hope you enjoyed both the videos. In case you have any feedback, please feel free to leave in the comment section below. Please share our channel with your friends. Please don't forget to subscribe and like to this video. If there's any other particular topic or concept where you want us to make the video, please name that in the comment section, and whenever we get time, we definitely try to cover that as well. Thanks for watching once again, and we really hope you have a good profitable trading week ahead. Please don't forget to like, share and subscribe to our channel.